management of NIIT Learning. We have Mr. Vijay Thadani, the co-founder of NIIT Group and Vice Chairman at NIIT joining us. Mr. Thadani, good to be speaking with you again. Let's talk about your financials. The revenue for NIIT Learning has grown 20%, but EBITDA margins have seen some weakness. They've dropped. Could you elaborate the points behind this margin compression and your outlook going ahead?
Yeah, so I think the most important thing I want to say is that in a period of very high uncertainty and a lot of volatility in the market, we have grown 20% year on year and 5% quarter on quarter overall basis, though backed by the small acquisition which we added during this quarter. Even on an organic basis, it is 17% year on year and 3% quarter on quarter. EBITDA in absolute terms has grown by 3 crores this quarter on a year and 1.5 crores on a quarter on quarter basis. However, as you rightly said, the margins look less. However, they are on the upper end of the 20% margin, which is what is our baseline. And product mix changes do make this go up and down a little bit from time to time. So I think overall the fundamental performance, in fact, has strengthened and is on the top end of our guidance. In fact, a little beyond the top end of our guidance, and that makes us feel very nice. I think the constant currency revenue is, as you have rightly pointed out, is 14.5% and 15 and 3%. That's perfectly right. Yeah.
Right. So on this note, Mr. Thadani, would you be okay to revise your guidance upwards right now, or are you comfortable with where you are?
I think our guidance at this point of time is aggressive enough, and we would like to stay with that guidance. I think I need to add to that, though we strongly feel much stronger than before because we added 3 new MTS clients. In fact, with the acquisition, we got 7 more. So we now have 104 MTS clients and a revenue visibility of 409 million going forward, which all make us feel very nice. At the same time, the volatility in the market is still there. And I think we would therefore like to continue with the guidance that we have given so far of 10% plus growth year on year.
Okay, so sounding optimistic on that note. Yes, Mr. Thadani, sounding good. Let's talk about your revenue mix by sector. I can see that the revenue from technology and telecom and energy, BFSI, all of that has gone up. On the flip side, there has been a little bit of a cut from management consulting and professional services. What is your outlook on what your revenue mix could look like going ahead, and which verticals could be the key driving factors?
Yeah. So technology and telecom is the order of the day, and therefore you're not very wrong that is growing fast. And we are anyway the most preferred partner as a training partner for technology and technology companies specifically. So that is going strong. I think the sector which is gaining momentum is industrials. And in that, we have actually bundled 2 or 3 parts, which were smaller parts. And industrials is more than the conventional industrials to which we have added energy and made sure. So manufacturing and all these will also contribute to that. So that's definitely a growing segment. Overall, I think the large enterprises, there are 2 themes which are driving their usage and consumption of training. One is cost management. So they want to make sure that they are able to deliver much more with the same workforce. And the second is the big transformation which is taking place with technology and specifically with AI. We have a pole position in AI-enabled learning or AI-enabled learning and transformation of learning and development function. And I think we are very, very strong there. This quarter, our AI-enabled learning contribution has been nearly 10% of the revenue. So I think that absorption is giving us a lot of confidence that we see positive themes going around. And therefore, that may be across the board. Pharma, life sciences will definitely continue to remain a strong segment for us. BFSI is and will remain. Technology is moving fast. And I think that you were asking what are the newer sectors. I would say industrials is the new sectors.
Okay. And Mr. Thadani, you did speak about the acquisition of the MST group. If you could help us understand by when this acquisition will start being revenue accretive?
Okay, it is already revenue accretive.
Okay.
We concluded the acquisition on 9th of July, and I think they've hit the ball, they've hit the ground running. In the 20% growth that you see year on year or 5% quarter on quarter, there is a contribution of 2 to 3% which has come from the acquisition itself. And the acquisition over the year will not only be revenue accretive, it will be profit accretive, and hopefully it will also be EPS accretive.
Okay, sounding optimistic on that note, Mr. Thadani, we'll let you go. Thank you once again for your time. Always good to speak with you.